name is Chris Dudeck, the 2018 Winnipeg Realtors President. I'm joined by Peter Squire, Market Analyst for Winnipeg Realtors. Peter, let's chat about this year's first quarter. I see sales were down compared to last year. What can you tell us about that?
Yes, Chris, sales in March resulted in a slower first quarter compared to our best years on record in 2016 and 2017. Sales of 2,228 are down over 8% from the first 3 months of last year and 4% over the 10-year average. March sales of 974 decreased 12% from March 2017 and 5% over the 10-year average, while new listings, just under 2,100, were down less than 5%.
And how was the inventory? Were there enough listings?
Our current inventory was almost identical to last year at around 3,900 listings, with a modest gain in residential detached properties and a slight drop in condominiums.
So what can you attribute these sales number changes to then? Is this an effect of the new mortgage rules?
Yes, I think it is fair to say that the new mortgage rules combined with the higher mortgage rates in the last year have made it more difficult for buyers to acquire their desired property. This applies to first-time buyers as well as existing homeowners who, instead of listing their property, decided to stay put, as the tougher qualifying environment is keeping them from moving ahead with their next purchase. Of course, you cannot discount Mother Nature. March was unseasonably cold, so it did nothing to motivate buyers to kickstart the spring market.
Traditionally, the second quarter is by far the busiest quarter of the year, and this will truly reveal the total story if this slow first quarter start is simply just that. Clearly, we need to wait and see if April rebounds and regains some of that market momentum lost in the first quarter. Peter, are there any other observations you'd care to share with us?
Yeah, just a few more, Chris. While the number of condominiums sold saw sales drop 14% in the first quarter, they are only 1% below the 10-year average. The average sales price of $240,740 has held and was less than 2% below the more active first quarter of 2017. Residential detached experienced an 11% decline over the 2017 first quarter and a 7% drop off in same period sales over the 10-year average. The average sales price was higher, however, at $327,959 compared to $319,549, an increase of nearly 3%. The average days to sell was 29 versus 27 in 2017. I noticed that the majority of MLS areas which experienced the biggest decrease in residential detached sales compared to last year were in the more affordable price ranges and often had a corresponding drop-off in available listings. This same pattern was not the case with condominiums. They had more an issue of less sales compared to 2017.
As always, Peter, thank you for the insight, and I look forward to chatting with you next month when our April numbers are available to share. If you would like more information about your local real estate market, please contact your realtor for guidance and advice as it pertains to your individual real estate needs. Thank you.